Welcome to Mutual Fund Family.
Log on to mutualfundfamily.com for more info.
Life is getting simpler day by day, right from opening a bank account to investing in financial products. Everything is done in just a few clicks, without any hassle going through clutter of forms. What's more, with an endeavor to make investors' lives simpler by helping them select a right product and take an informed investment decision, SEBI has issued a circular to rationalize and categorize open-ended mutual fund schemes in India to bring uniformity in schemes launched by different mutual fund houses by defining distinction in terms of asset allocation, investment strategy, etc., and standardizing the scheme categories and characteristics of each category. Accordingly, mutual funds would now be broadly classified as 1. Equity schemes, 2. Debt schemes, 3. Hybrid schemes, 4. Solution-oriented schemes, 5. Other schemes. UTI Mutual Fund has embraced these changes and have prepared a quick guide for its investors by dejargonizing complex terminologies and list of new scheme categorization at UTI Mutual Fund. Now, let's look at debt schemes in detail. Debt schemes invest in fixed income securities such as government securities, debt and money market instruments across different time horizons with an aim to provide stability to the portfolio. Before proceeding, let's understand the most important term with respect to the circular, that is, Macaulay's duration. It signifies the sensitivity of bond price to changes in interest rate. Bond prices are inversely proportional to interest rate, which means bond prices rise when interest rate declines, thereby increasing the value of portfolio, and bond prices decline when interest rate rises, thereby decreasing the value of portfolio. Bonds with a longer duration will be more interest rate sensitive in prices and vice versa. Now, let's check out duration. Macaulay duration-based debt schemes categorization at UTI Mutual Fund, wherein overnight fund will invest in overnight securities such as CVLO and repo having maturity of 1 day. UTI Overnight Fund, previously known as UTI GSEC Fund, is classified under this category. Liquid Fund will invest in debt and money market securities with maturity up to 91 days. UTI Liquid Cash Plan continues to be classified under this category. Ultra Short Duration Fund will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 3 to 6 months. UTI Ultra Short Term Fund, previously known as UTI Floating Rate Fund, is part of this category. Low Duration Fund will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 6 to 12 months. UTI Treasury Advantage Fund is classified under this category. Short Duration Fund will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 1 to 3 years. UTI Short Term Income Fund continues to be classified under this category. Medium Duration Fund will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 3 to 4 years. UTI Medium Term Fund continues to be classified under this category. Medium to long duration will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 4 to 7 years. UTI Bond Fund is classified under this category. Dynamic Bond will invest in a portfolio of securities across duration depending on the fund manager's outlook on interest rates. UTI Dynamic Bond Fund continues to be part of this category. Then, let's have a look at instrument or credit quality based schemes wherein Money Market Fund will invest in money market instruments with maturity up to 1 year. UTI Money Market Fund continues to be part of this category. Gilt Fund will invest minimum 80% of its total assets in government securities across maturity. UTI Gilt Fund continues to be classified under this category. Credit Risk Fund will invest minimum 65% of its total assets in below AAA and AA plus credit rated bonds or equivalent. UTI Credit Risk Fund, previously known as UTI Income Opportunities Fund, is part of this category. Banking and PSU Fund will invest a minimum 80% of its total assets in debt and money market instruments of banks, public sector undertakings, public financial institutions, municipal bonds. UTI Banking and PSU Debt Fund continues to be classified under this category. To summarize, let's take a quick look at the comprehensive list of overall restructuring at UTI Mutual Fund for debt schemes. With the latest categorization changes, your investment journey is now simplified. Go ahead and invest in a scheme of your choice.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Thanks for watching. Drop a like, leave a comment, and don't forget to subscribe Mutual Fund family.